right, well, we're back for our economic update. I'm John. This is Dennis. We're Beyond Wealth Advisors, and we're going to jump right into it today.
Okay.
It's been kind of a heated up summer, but we're kind of maybe chilling out a little bit. So what's up with the economy these days?
Well, we continue to expand. It's we're seeing probably for the year we're going to see an expansion of the economy of over 6%, which is about what was expected earlier in the year. So that's all good. The inflation is probably going to be, I think, I'm a little bit higher than some of the estimates, but I think 5 to 6% for the year. And a lot of that's caused by bottlenecks in the economy. I mean, I have a leaf blower I've been trying to get fixed for like 3 months. They can't get the part in. That's a bottleneck, okay? I think that their consumer confidence is really high. It's the highest it's been since pre-COVID. So that's an excellent indicator going forward. Retail sales kind of lagged a little bit for the last couple of months, but last month they exceeded the prior year. So we're starting to see retail kind of pick back up a little bit. So overall, we're seeing the economy really in a nice position right now.
Right.
And going forward, we would expect it to we're kind of in a really kind of steady eddy type approach right now.
Well, we like to hear that. So let's talk, how does that specifically impact maybe the U.S. markets and kind of what we see here at home?
Well, right now what we're seeing in the U.S. markets is we're seeing record highs last month in every major index. The S&P 500 has actually had 7 months in a row where they have had new highs. So that obviously is extremely important. A lot of times people say, well, gee, we're at new highs. Does that mean we have a problem coming forward? We have a pullback. Well, the interesting thing is the earnings of companies, which is the reason why stocks are priced the way they are, for the last several quarters have been consistently beating the street's estimates. What all the experts say they're going to make, they're making more. In the last quarter, this quarter we just passed, the second quarter of the year, 86% of the companies, the S&P 500, beat the street estimates. That's huge. And they didn't just barely beat them. They beat them by an average of 16% higher profit. It's just amazing. And overall, the S&P 500, the year-over-year increase of last year versus this year is up 92%.
Wow. Yeah, we often hear, follow earnings. If companies are making profits, then that's typically good for the economy. So, what's that look like going forward? Can we maintain this?
I think so.
Yeah.
I think that we look very nice outlooks. Several of the economists that I follow have been upping their estimates of where the S&P will end up for the end of the year. Right now, I'm kind of in the park. I think by the end of next year, by the end of 2022, we should exceed 5,000 the S&P.
Wow.
It's not a huge increase from where we are today, but certainly most people will be very happy with that. So I think that's really important. One of the things that's driving my feelings on that is we're seeing volatility really tamp down. A lot less volatility than we were seeing earlier this year and obviously less than last year. So that means we're kind of calming down expectations a little bit. But, well, I got to throw that in there. I do expect that we're going to see a typical pullback in the market sometime in the next few months, probably in the 10% range. Now, typically these type of pullbacks are just market-driven pullbacks, not really driven by the economy and stuff. They're just, people get profits, they pull some profits off, typically recover within 2 to 4 months. So we would expect that. So but we can't time when that is.
Sure.
So it could be happening today. It might be happening this week. It may be happening in October. It may not happen until December. We've had them in that time period too.
So excellent. Yeah. All right. So let's drill down a little bit further. Any specific areas that you see some opportunity, and any areas that maybe have cooled off a little bit?
Okay. Well, I think that one of the things we mentioned, retail sales being up and consumer confidence being up, that would mean consumer discretionary is going to continue to do well. So those things you have discretion. It's not the food and toilet paper. It's the we've already got all the toilet paper we need from last year, I think. But it's all the discretionary things. People are finding ways to increase their lifestyle. Financials are doing great. Stability in the economy makes financials do well. So all your banks and insurance companies and all those other things that follow in financials are doing well. The energy sector is doing well. I think there's kind of a top to that because as we get prices towards the 70 or 75 degree range where we think they'll end up being, That'll kind of tamp down a little bit, but we do feel like right now that still is a good place to be. Industrials are great. We have a backlog of over a shortfall in inventories. And that shortfall in inventories will cause manufacturing companies to have to produce more to get their inventories back to where they need to be to maintain the flow of goods out to the consumer. Communication services is probably a great place to be. It's a section of the technology industry. It should be the outperformer in technology going forward, and that has to do with just all the communication that flows and the massive amount of data we're seeing out there that people are getting their hands on. That's going to continue to do well. Technology itself,
I was going to say, what about the broader scope of technology?
The broader scope of technology is still continuing to do okay, but it's going to be a lesser degree. It's not going to be outperforming quite as much, we don't feel like, going forward. Oh, certain companies will, but as a whole, we don't really see that being quite as broad as what it has been.
All right, let's wrap this up. Haven't talked about international. There's a lot of talk internationally right now, so what do you see happening there, and what do you suggest?
Well, it's a pick and choose basket.
Okay.
China is still reeling from COVID. Their economy continues to slide. Also, Japan has been very steady. They've been slowly improving. Their GDP is slowly going up, and they're not going to be overly robust. Emerging markets, ex-China, really are just poised for the growth in the rest of the world economy because they kind of supply the world with a lot of different things. Sentiment in Europe is improving. I'm not really looking for a big move in the market there, but the sentiment is improving. So if people feel good, then they'll start buying more, and it'll be a little slower than the U.S. But I feel pretty good. Feel pretty good about that. Not great, not enough to go jump out and buy a whole bunch of it, but I do feel like it's probably an improvement, which is good. That's very good.
Well, it sounds like overall you feel pretty good about kind of where we're at right now, and maybe a good time just to kind of take a deep breath and be positioned for the future and go from there.
I'd say that's true. I don't think it's a time where we're like, okay, today's the day to make a huge amount of money. That was 10 months. That was a year ago.
Right.
But I think steady eddy performance, getting back to normal, what we would expect is kind of where we should be going forward right now.
Well, fantastic. Well, that wraps up this month's economic update, and we look forward to seeing you again soon. Make sure to reach out to your advisor, and as we head into the fall and the winter months here, if there's anything specific year-end, it's a great time to take a look at your financial plan and all those other fun things that happen here at the end of the year, like tax planning and all of that. So
football games,
and barbecues and tailgates and all that. So see you next month.
Take care.